Now in this video, I'm going to introduce you to a strategy Warren Buffett uses on stocks, and when applied to real estate, it makes an incredible safe way to invest. With all the problems in the economy and a credit crisis, I'm now more concerned with safety and actually less concerned with maximizing the return on an investment. Warren Buffett looked for stocks that could provide an annual return of 7 to 8% and had tremendous upside in value. This he figured provided him with what he called a margin of safety. In essence, he would be buying a bond with future equity growth. In my view, real estate, if purchased correctly, mirrors the same strategy Warren Buffett implemented with his investments. When I wrote if purchased correctly, I meant purchase for cash. No leverage, no mortgage, outright ownership. Let me go ahead and give you an example. If you were to purchase a home at today's discounted prices, let's just use for an example of $80,000, you'd get $900 in rent, then you'd have $35 for insurance and $100 for taxes. That would leave you with monthly cash flow of $765. You would have instant equity also too by buying at these discounted prices. Cash flow is $765 a month for 12 months equals $9,180. You divide that into the $80,000 for the purchase price, that would give you a 11.4% annual return on your investment. Now as an investor, you would collect a percentage equal to your investment until the property was ultimately sold. As time passed, the equity in the property would also grow, pending even a larger financial return. The part of the strategy I love the most is that there is actually no monthly debt service. If a tenant disappears, there's no monthly loan payment to be concerned with. My strategy would be to rent the home on a regular rental program at lower monthly rents to keep good tenants in the home on a long-term basis. This way the turnover would be reduced, saving vacancy-related expenses as far as advertising, painting, carpeting, etc. The goal, no debt service. It is increasingly difficult to borrow money right now. This program is no credit needed. And realize that it's not easy to write a check also for $80,000 to buy a single family home. This is the reason I've created this video. I'm actually creating small partnerships to buy single family investment homes for cash. I would identify the properties, handle the purchase, and manage them myself. I wouldn't charge a management fee, however, I would ask for ownership in a partnership without a financial contribution. Basically, I'm willing to offer my time and expertise to build a successful, safe partnership that generates a fixed monthly return. Plus, who else would you want on there that gets first access to these good buys? Here's how the partnership would look. My management contribution would be 10%, and then based on the amount of money that you would go ahead and put in would be the amount of percentage that you would own on it. The plan is to distribute the cash on a monthly basis after a certain level of financial reserve has been established. This means each partner would receive monthly income. A partner could contribute any amount to the partnership, then their returns would be proportional to their investment. The minimum investment into the group is $5,000. The net monthly cash flow would be paid out based upon the ownership percentages listed above. In the example, the annual net cash flow was $9,180. This amount would be distributed based upon a percentage. A partner who contributed $10,000 in the partnership would collect $1,019 throughout the year, representing a 10% annual return. The same percentages would also apply to the eventual profit on a sale. The need for cash calls would be minimized or eliminated because there would be no debt on the property. One final benefit of this approach is that the partners could use self-directed and Roth IRAs to buy into the partnership. By setting up the IRAs, you can have your monthly profits deposited each month, creating even more wealth, tax-deferred or tax-free, whatever works best for your tax consequences. Then watch your retirement grow. There are some terrific deals in the market right now, and it makes sense to acquire a few of them at the bottom. However, in my opinion, we should rig the game in our favor by eliminating debt from the beginning. This partnership would actually be debt-free from beginning to end. I would also focus on buying homes in areas with the best appreciation potential in order to lock in the highest possible equity growth going forward. I would obviously be looking at bank-owned homes and other distressed sale opportunities. If a property were acquired that needed to be improved, I would manage the rehab and the repairs completely. This video is to go ahead and invite you, if you have interest, to come to one of our monthly meetings. At the meetings, I have set up a tax professional, an Edward Jones representative, and an attorney there to go over the different strategies and how we will be implementing and how they all work. My goal is to buy at least 1 or 2 properties per month. If you are interested and would like more information on this program, sign up as on the side. You will be directed to a form that you can go and fill out your information. Alright, hopefully we'll see you at one of the meetings there. Goodbye.